Hey, it's Dustin Hart with Keller Mortgage. So, I'm sure by now you've likely heard from the media that interest rates are going up. Well, that certainly is the case, and quite frankly, they've skyrocketed up in a short amount of time. So, let's dig into why they're going up. But first, we have to start with why they were so low in the first place. In the beginning of the pandemic in 2020, our economy was in complete turmoil, and the Fed had to come in and prevent us from having a depression. They did this through a concept called quantitative easing, and were purchasing a huge amount of mortgage-backed securities and treasuries that help drive rates down. They've started to end their purchases of these, and it is leading now to higher interest rates. And inflation is getting out of control, which is a huge catalyst for rate increases. Normally, guys, bad economic news like a war in Ukraine would lead to rates going lower, but with the Fed ending quantitative easing, soaring inflation, it's leading now to these higher interest rates. And guys, don't confuse the Fed funds rate increase with long-term mortgage interest rates, as you will hear from the media that the Fed is raising their rate. Well, they're trying to curb inflation with raising their short-term rates that directly impact things like auto loans, home equity lines of credit, and credit cards. With the Fed doing this, it should help inflation, curb inflation, and could help to lower actually mortgage interest rates. So we're in some unprecedented times right now, but rates are still very low in the history of mortgages for our country. Waiting for home prices and rates to come down, it actually might end up costing you. Look, I spoke to a real estate agent a few days ago about a mutual client we have that was approved to purchase a home last year at the end of the year, but decided to wait because he thought that property values would come down. Well, home prices have only gone up every month since then, and so have rates now. He wanted to keep his payment in the $2,200 a month range, which at that time was about a $400,000 house. With the rate increases, he's now looking at about $350,000 and is basically now not even going to purchase a house. Home prices are going up because of the simple supply and demand factors that don't look like they're going to ease up anytime soon. The other thing that's going up, guys, is rent, and there looks like that's no end in sight. Rent payments are being increased, in some cases 25% year over year. So get with a mortgage professional today, see what your options are on a fixed payment without having that landlord raise your rent every single year. And it is likely that rates will go back down again at some point, which will allow you to potentially refinance your home and get a lower payment. So guys, look, everybody's situation is unique and different, but waiting probably will end up costing you a long run. So just give us a call. Let's go over all your options and see if it makes sense for you guys. Thanks a lot.